Good afternoon. I'm Christopher Querée from Ruffer, LLP, Investment Managers. We're pleased to be supporting ACF at this conference today. Ruffer manages money for over 300 endowments and over £2 billion in assets. Our topic today was the stock market cycle. And we deliberately entitled this From Euphoria to Despair. And the aim of the workshop was really to consider the stock market over a very long time frame, i.e. well over 100 years, and consider the various cycles we've seen. We're conscious that certainly over the last 10, 20 and even 30 years, the stock market cycle has seemingly been pretty steady and upwards. What can we learn from history was really one of the questions we wanted to ask. And indeed, we look back to the 1920s and the gold standard before that, into the Bretton Woods environment and the hyperinflation and fiscal inputs we saw in the 1970s, to see if we can learn or garner any lessons as to how events might play out over the next few years. So a long historical sweep, looking at past regimes and really questioning if we're going into some sort of regime change. And notably, we entitled the last 30 years or so a regime of the central bank put, i.e. central banks cutting interest rates and supporting markets. And perhaps with interest rates as low as they are now, that's very much coming to an end. So that was really the goal of the workshop, to give a very long perspective and really provoke some questions for trustees and those who are looking after charitable endowments. So really, what were the takeaways from that? Well, I think firstly, as we illustrated, asset prices are incredibly high in terms of their valuation levels at the moment, and therefore there's probably a need to actually consider the risk and time frame that you can tolerate for your endowment. Again, considering the notion of a regime change, is it really right to look back over the last 30 years and assume things will be as smooth as they have been, and can we learn lessons from those previous 70 years that we highlighted? And really what we want to do is really encourage all those with responsibility for endowments to consider perhaps a rather different environment in which they're operating, different political influences, a different monetary regime, and really question how they should position for the future. Thank you.